It's like the
Okay.
and we're live. Good morning. Welcome to Coffee Time with Marie Torossian CPA. Good morning, Pedro. How are you?
I'm doing very well, Marie. Doing very well.
Wonderful. I want to welcome everyone that has joined the show. Those of you who are returning to the show, thank you for coming back. And it means that you're getting so much value that you always come back. And for those of you who are joining us for the first time, thank you for joining. Give us a thumbs up or a hands up in the comments, and we'll know that you are new. And welcome to this show. Of course, welcome to our listeners as well, since we are on audio podcast as well on multiple channels, actually about 10 of them, such as Apple Podcasts, Google Podcasts, Amazon Music, and such. You can find that information on marieterson.com/podcast, and you'll see the podcast there. You can download, or you can find the channels that you can listen to over there. Of course, don't forget to subscribe, like the channels that you are using to listen or watch us on, so that you always know when we're going to go live. And so let's get started. Just a quick intro about me. Marie Torossian. I'm a certified public accountant, advisor, and a coach. Coaching is the new area that I'm focusing on, helping entrepreneurs and small business owners to increase their, revenues by helping them through sales and marketing materials with Grant Cardone. So I'm very excited about that expansion in our business, and excited to help a lot of entrepreneurs. Also wanted to share I'm also the creator of Valuation-MT methodology, which is a very specific methodology I use with business owners who have reached their first million to get to 10 million and more. And that's more on the financial side of things. I'm an author of a couple of books. The Business Owner's Guide to Operational Accounting, that is an ebook. I'll always have the links in the chat. And also a complete guide to business growth. That's the book that's available on Kindle, and you can listen to it free, actually, if you have Kindle Unlimited. With that, of course, I always have my tax colleague, Pedro Gonzalez. We did say good morning, but Pedro, please introduce yourself to our audience.
Yes, Pedro Gonzalez, your business and tax strategist. We are here to help you specifically in three strong fronts, which is a cash flow management, improve your cash flow. Cash flow is the lifeblood of any business, regardless of the size of the business and industry. Tax management, which is help you minimize the tax liability. Taxation erodes the wealth of any individual and business. And then through exit strategies to help you build a strong business. So then when you are ready to exit, you have the proper valuation for your business. I have said before, we're all going to exit. It just depends on how we're going to exit. So that's how we help our clients. I have issued an ebook, a free ebook on real estate investing strategies. Has been well received. And I encourage those that are interested, even just to explore some of the how to get, or even if you are already into real estate, there's some topics in there that you'll see that can help your business. And immediately you're going to see some changes in your tax situation when it deals with real estate investing. It comes with an e-course, 7-day e-course, and then newsletters that will continue helping, providing you tips on real estate investing and taxation.
Awesome. Thank you so much, Pedro. This is a lot of exciting materials, and I know you're doing great work. Just to do a quick summary of what we've talked about in the past few episodes. Well, when I say few, the past 29 episodes. Guys, by the way, we have hit 30 episodes.
Yeah.
Super exciting. We're going to be hitting 50 soon. It's like halfway mark for us. So 100 episodes is the goal. So 30th episode. In the past 29 episodes, we've been talking about a variety of things from, we did a series on tax planning. We've talked about self-employment quite a lot. So if you are self-employed, please make sure to go back and check some of those other videos. In all of the on YouTube, especially, you will see all the description of what we talked about, so it's easy to find. Also, we've talked about 1099. We've talked about employee tax retention credit. We've talked about how to cut down your costs, how to talk about entrepreneurship, mindset, motivation, discipline. I mean, we are talking anything and everything business strategies to help you grow your business. So today, we were actually in between two different, ideas of what to talk about. So we can start with, how to, basically the top line of the business is going to be very important. Sales, right? So this is something that is, crucial for any business, and how it really impacts the growth and value of the business as well. So Pedro, you mentioned this was an area, obviously it's going to be important for the business's cash flow. What are some of your thoughts that you want to bring on board? And then I can, jump in when needed.
Mhm. Yeah, when we're looking at a successful business, what can make or break a business, or what you can, in some cases you see two businesses in the same industry, same size. One tends to be ahead of the other, one tends to dominate, the other one kind of falls behind. One of the areas is obviously sales. Your ability to bring that product into the market, and be able then to get your process moving as far as your inventory. And so one of the areas that you and I were talking about, how the connection, in essence, so we look at the connection between the income statement and the balance sheet, or sales and cash flow. You know what I mean? How is it that the two can come together? Hold on. So uh, you can have a very good product, but if you cannot get that product into the consumer's hands, then
Yep.
your business dies. Your cash flow process requires that sales mechanism in place
Yes.
to ensure that that product makes it into the market. Now, followed by that is the proper pricing. Again,
Yeah.
you can have a very good product, you can have a very good sales team, a very good sale mechanism in place. It could be yourself, a solopreneur. You're very good
Right.
at selling your own product, but then if the product's not priced properly, you might be selling, but then you're going to see that the gross profit margin is very thin, and
Right.
it relates, and then you can see then your bank statement not is almost like it's not there. I mean, I
Yeah.
have received many times many calls like, I sell, I'm moving my inventory, but I don't see it in the bank.
Right.
And many times it is because of the pricing structure, and that's the reason why they're selling, is because they're underpriced. You know what I mean?
Mhm.
Sometimes either intentionally, sometimes unintentionally, because you're not keeping your eyes on the market. You don't know how to properly value your own product, and you could probably make a small change in your pricing and see the improvement immediately on your cash flow.
Yeah.
So on the other side of the equation is, and then is what we call, we accountants look at it, the balance sheet, an area, the balance sheet, that tends to be ignored, because a lot of times you see a lot of focus on the income statement, the sales, the net income. But the other area that gets ignored is in essence, more related to the cash flow. The income statement is about the sales. You can reflect that we're selling, and you can show a bottom line that says, our net income after all my expenses are paid. But then on the other side is cash flow,
Yeah.
and I have mentioned before, like, cash flow is the lifeblood of the business. Again, you can be selling, 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 but if you're not cash flow healthy, your business dies. Even
Absolutely.
though you have this mechanism in place, that you see that your inventory is moving, but then your business dies. And then how can that be? Because then again, you probably are not looking at the other side of the equation, which is your cash flow, and you have to monitor that. And in a lot of people probably started noticing this during the COVID, because there was a slowdown. See, as long as the machine is moving, you probably don't feel it. Yeah, I mean, even though you can, somebody like yourself will probably look at their financial, you can put together a trend, and
Oh yeah.
you can potentially see. Listen, Pedro,
Yeah.
you're selling, but listen, you're very thin margin, and at any moment you can encounter a problem. But I'm not saying, but Maria, I'm selling. You know what I mean? Look at my bank. Yes, things are moving, but you're because of your gross profit, anything goes wrong, and then you immediately could end up in trouble. So what happened in the COVID is you saw a slowdown. A lot of people start seeing then the problem of the thin margin. You know what I mean? So
Yes.
that's when you saw a lot of people. Oh, if even if for one little widget I don't sell, I can feel it in not able to pay my bills and so on.
Absolutely.
So on the other side comes in, especially for businesses that deal on, I'm using, let's use a retail that operates on credit. So you're gonna have vendors, you're gonna have
Yes, of
customers on
course.
credit, and then
Hmm.
you can have inventory. Three factors that tend to either make or break a business. If you're not managing that, you're not managing your inventory, you're not managing your receivables, and then you don't have a very strong relationship with your vendors, it can break your business. So it's an area that again we look into our businesses to help them improve that area, because again inventory management, as long as the inventory is moving, you if well you actually when you break it down, you sometimes you see that you have some stale inventory, meaning that's inventory that is sitting and you're not getting out. Your ability to move your inventory, what we call the inventory turnover, it will again make or break a business. It is your ability to turn that inventory into cash flow. So the faster you can do this, that rotation that you do in your inventory can make it it could again it will be how strong you are in your financials. uh, and so the more older stale inventory you have in your inventory, it's going to be hard, because then that inventory one is not only stale, it's probably damaged, it's probably obsolete. And so what are you going to do? You bought it at a certain price. For example, technology. Technology is moving so fast that if you're into that industry, an iPhone 11 or 12 is no longer has the value when you had that inventory
Right.
a year or 2 years ago. So if you still have those kind of iPhones 11 or 12 in your inventory, what are you going to do? The same happens with the automobiles and so on. There's certain technology, computers and so on, that it loses value within a short amount of time.
Very quickly. Yes.
Yeah.
Yes.
So, you have to be on top of that, and so then your inventory gets kind of flush it out of your financials, so then you convert that quickly into cash flow. And again, this applies to even the solopreneur working out of a garage or selling Amazon
Yeah.
product filled with, I don't
Correct.
know, boxes of whatever, and you have to be able is to convert those boxes into cash, because that inventory, one, either you bought it on cash, meaning that now you have you took liquidity and converted it into an illiquid asset, or you bought it on credit, meaning I owe a vendor for these inventory, and I better convert this quickly because I want to maintain a healthy relationship with my vendor, because that's
Right.
going to guarantee me that I can go back to that vendor and demonstrate, listen, I need another whatever, another large order of those same boxes, because I can demonstrate I can get this moving. I want it on credit. That's the ideal situation. Otherwise, the vendor is going to obligate you to pay on cash. Now, so you have to upfront the money. Now you put those boxes into your warehouse, and you have to be able then to move that inventory.
Yeah. Yeah. No, I'm totally with you on this one. And yeah, going back to the pricing, that's so key, and that's one of the areas that we implement through the Valuation MT, which is the letter U, utilizing value pricing strategies
Exactly.
to make sure that there's not only the pricing is correct, but there is value in that pricing, and then the margin is calculated into it properly, because otherwise, we're just pricing. And this really is part of an experience I had with a client as when I was a consultant, where he was, like you said, the inventory was moving. There was a lot of big contracts coming in. The top line was doing great sales team. Exactly like what you're saying was my experience, and this is how it came about. But there was like the margins were off. There was just no way it was not making money, and that's kind of what prompted me to put this very unique process to make sure that we can help business owners with that pricing part. It's very important part of it. The other thing that I've noticed as well, and as you mentioned, going into the balance sheet, is, for example, I've had another client where it's a medical practice that they record the cash coming in from let's say the claims that they are getting paid, but they're completely disregarding the claims that have been submitted for work already
Yeah.
performed,
Okay.
right? They're technically receivables, right? That's
Yeah.
cash
Yeah.
getting expected to come in. That's a very strong position on the balance sheet when you have receivables of, let's say, 100,000, 200,000, I don't know, a million.
Yeah. Yeah.
And even though you're not paid, but the performance has been done. You have seen the patient, you have, you've earned that claim, and you're just waiting to be paid. So that's definitely something that they need to record on the
Mhm.
balance sheet
Yeah.
and show that they've earned. So now the P&L is going to show that revenue earned, and the balance sheet is going to show the asset that's related to that. The cash is not there yet, but
Yeah.
at least it's still showing that strong position of, I have receivables that I'm just waiting to get paid for.
Exactly.
So
Yeah.
yeah.
No, and there's another area that gets at times, again, the balance sheet is many times neglected. It's like the ugly duckling.
Yes,
You
yes.
know what I mean? It gets neglected. People. I think most entrepreneurs are familiar with the profit and loss or income statement. Sales. They are at least aware that the sales, and they look at their sales numbers. They look at the net income numbers. But the other area that gets ignored is that balance sheet, and that is gonna determine its cash flow. And if you are not able, like you were saying about the receivable, now the receivables are reflected in your financials as earned. So you're gonna see sales numbers, but it's not in the bank yet. So
Right.
that's why
Yes.
many times you see business owners like, you listen, I'm profitable, yes, on paper, but
Yes.
not on the
Cash
not on the
flow.
bank. Yeah, cash flow.
Yes. Yes.
So, and many times it also don't make a correlation of the cost of financing, meaning that, for example, a lot of professionals, what happens is you're on credit. You perform services, either be a doctor. So in this case, the billing is not me for per se, because I'm paying with my insurance. Is the insurance becomes now their customer. The receivable is the insurance company. Now, the longer it takes for me to collect that, and how well I prepare my billing, how quickly or how I do my follow-ups to make sure that I can shorten the period of
Right.
time between the invoicing, the performance of the service. Like you said, I attended a Pedro today, and I need to convert that. Let's assume only one bill that says it's Pedro. I attended it today, April 28th. How quickly I can convert this, or by, let's say, no later than May 15th, or
Yes.
no later than, let's say, 30 days by May 27th, I can bring those dollars back into my bank. And the reason is a lot of professionals work with lines of credit. You know what I mean?
Mhm.
So banks are as long as you can show and demonstrate you have the ability to generate revenue, they'll give you a line of credit. Now, there's a cost involved to that, because and that's why sometimes they don't see the impact, because I'm able to pay my bills. But if instead of 30 days, it takes me 60 days, so that's 2 months of financing that I have had to pay to collect that. So again, if my gross profit margin is 10, it's that interest is eating into that. It's the
Yeah.
cost of doing business. So I need to be able to shorten that period.
Yeah. Absolutely. And another thing that just popped in my mind, which is, for example, the example you were giving, I see the patient Pedro, and then there's a processing time, right? That's an internal processing. So, for example, if I'm expected that once I submit um, paperwork to the insurance agent, the insurance company, it's going to take them 45 days to pay me.
Right.
So there has to be an internal process where, okay, I see the patient, I submit the claim within, let's say, 1 or 2 days, so I don't delay it. So this brings me to another area of Valuation MT, where we actually focus on building processes, creating a walkthrough of what is my process. I see the patient, then how many days after do I build the insurance company so that my return or the cash flow is coming in within a specific timeline. So then now we're building the cash flow management into it. So the processes are going to help the cash flow management as well. So yeah, I mean, these are things that most business owners are not paying attention to because they're just focusing on top line, bottom line.
Mhm.
But there's just way so many other pieces of the puzzle going in the middle of it that if you don't put all the right structures into the place, the profitability is going to eventually die out.
Yeah. And so, now with that said about the valuation, now moving into then valuation and exit, the importance of that, what we just discussed right now, and how that plays into your valuation of your business is another aspect. A lot of times entrepreneurs do not realize the value of their own business. I
Correct.
mean, I've discussed it many times that, a lot of entrepreneurs are in essence equity rich. They just don't know that their business has a value. I mean, they see it, they're getting in essence their paycheck and almost their business, not all, but, you can tell that some of them is almost like a job. I created my own job.
Yeah.
But an entrepreneur has a different mindset, and that is, I want to build value. I want to build a business that has value because it has to be outside of my own, it can exist on its own. So what we just discussed, creating that system, what I mean? Like you said, the having that system is a critical aspect of how me, as a buyer, you
Yeah.
have to put yourself on the shoes of the buyer. Buyers are buying is cash flow. What I mean? They're not interested on, well, the bottom line, what they're buying is cash flow. Your ability how quickly, and your systems that you have in place to convert either the inventory or receivables into liquidity.
Yes.
So you have to be able to demonstrate that, and that is going to add value. That's going to increase your value. That's going to make a difference between your business and somebody else's business. When you implement those systems, you can have, again, two businesses equal in size and in industry. But if one can show consistently that has a very clean system in place, it will be easier for me to absorb that business and either absorb it into my own existing business, or for me to in essence buy it, but not me, the business in essence owning me. I own the business, and I can easily let the business continue because it has a system in place. It has the proper management in place. They know what to do. They know about their billing. That, as long as they continue following that method, the business now all he did is change on the top, the ownership. But I can continue that same mechanism as long as I keep it in place. I know I can follow, let's say, the last 2 or 3 years that I've been reviewing this financials. It has a clean process of collections, of billing. It has a clean process of inventory management. It has a good pricing
Hmm.
of products. It's a good business. It increases the value.
Yeah. Yeah. Absolutely. That's why, I mean, part of tracking key performance indicators is very important for businesses. It's something that we implement as well as part of valuation MT process.
Yeah.
KPIs basically means that we're tracking specific ratios, whether it's the gross profit margin, it could be the liquidity, it could be the cash position. So there's different KPIs that business owners should be tracking, and not just only for themselves year over year. It should also be
Right.
compared to their industry specifically, and we have all the technology to do that. And that's going to actually help keep guiding them in the right direction and make sure
Yeah.
they are performing better than the industry. And when they start performing better, then they can ask for, they're going to get a higher valuation, first of
Yeah.
all. And then they can actually, if they have all their systems in place, they can actually ask for a even higher premium because they have structures in place.
Exactly. And that's the part that, exactly, Marie. And that's the part that many times they don't realize. I mean, their own valuation, you know what I mean? And that's why you can see a big difference between, again, two businesses, even, one across the street of the other. And you wonder why that one is demanding, in essence, and I can demonstrate the reason why. You know what I mean? And that is, again, the systems in place that that business has that will support that value. You know what I mean? That they're, when you look at their financial, the two has the same level of revenues. You know what I mean?
Yeah.
But one has a better system in place, meaning I can easily absorb this one compared to the other one. either has antiquated processes, or it's a little bit, I will have to invest additional monies
Right, right,
into
right.
getting that business. They already hired Marie, you know what I mean? And so they cleaned up everything. They have everything in place.
Exactly.
You know what I mean? So
Exactly.
versus the other one, the two, again, it's same. The one is asking more because they already invested. They have already the investment they made a couple years back is already paying off. The value is there, and again, a savvy investor will see the value in that business.
Absolutely. And you just reminded me, I covered the whole valuation MT methodology on a 10 week series on Clubhouse. If you recall, it was like pretty much took all of
Yeah,
my January, February, half of March. And it was so funny. On one of the weekly episodes, a lady came on board, up on the stage, the virtual audio stage,
yeah,
and she was actually sharing, and she waited until almost at the end, and she said, I couldn't leave without actually saying something, and she said, you are saying, like, you're literally talking about something I went through. And I said, well, share, please share. This is the whole platform for that, sharing information. And she said that um, she had gotten her company to up to 50 million. I mean, this is amazing already.
yeah,
And then she was getting ready to sell her business. And so when the investors came in, they brought in, a whole, accounting team to kind of go through the books, and literally they were pulling things apart. And as they were asking her questions, her valuation was coming much lower than she expected. And she told me that all the stuff you've covered in the whole process so far, valuation and the KPIs, the processes, that's how important it was. She actually learned so much from the process. She ended up not being able to sell. The investor was not interested.
right.
But because she went through the whole process that they forced upon her, she learned so much from the process. She ended up implementing all of the stuff she learned from the process
Yeah,
and continued growing her business on her own. But she
yeah,
said that was like the biggest wake up call for her when
yeah.
she lost an opportunity to actually sell because there were so many pieces of the puzzle still missing. And she was already at 50 million.
Yeah, and that's again the part that a lot of entrepreneurs do not understand. Why is it, for example, I encourage people at least 5 years prior, getting ready for an exit. So, and the reason is if you're gonna sell today, the implementation of some of the processes takes at least a year to 2 years to see the benefits. Uh,
Exactly.
some of them will be immediate, but again, to reflect on the financials. I mean, not necessarily the process,
Right, right,
see the
right,
immediate result, but for them to reflect on financials, it
right.
will take many times up to 2 years. So many times, what has happened is, and I have seen in multiple cases of situation where people are either buying or selling their businesses. When I'm being involved in both sides, is that sometimes a buyer will ask for not only 2, but in some cases 5 years of financial. That's why I look at a 5 year to prepare just in case, because
Yeah.
you might have had a strong year or 2 years, but if all of a sudden they ask you, listen, we like what we see so far, but give me a couple more years back, and then
Right.
your numbers do not
Yeah,
support it.
absolutely. And
So
for
that's why I
example,
like to have the
yeah,
5 years, because that way you're prepared. Strong financials. Your tax returns are coincide. Everything everything flows.
yes,
Looking at in whatever cleanup you have to do it. I mean, because it does pay off, and certain things pay off more than others. Like you hear realtors telling you where to invest your money, so the value of your home goes higher. Where you get the most bang for the dollar. You know what I mean? When you go into preparing your home for sale, the same
yeah,
for your business. There are certain areas that will immediately, or at least you get more return on your investment. If you have to choose between, and not to say that a website is not important. I mean, yes, have a website, but if
yes,
I had to choose between a good website and having investing some dollars in improving my for example my receivable process, invested in receivable process, because it will pay off more than having nice I don't know letterheads, and I invested in the logo, and that's important.
yeah,
But if I have to choose, I mean, If I'm buying your business, I'm not necessarily buying your logo. I'm buying your systems. I'm buying your cash flow. That's where your dollars are going to pay off the most.
Exactly. And I just thought of another comparison we could do here. For example, when someone's going to sell their home, they invest maybe 20,000 to get what, like $50,000 value increase when they're ready to sell, right? So business owners should really, really think through, if you're not investing in your business to put in systems, and especially on the financial side of things, you're just leaving money on the table, because you are not even taking care of your biggest asset. You are not. Your house is not your biggest asset. Your business is. Truly. So you really have to be comfortable to say, oh, I'm ready to spend 30,000, 50,000 in my business to put structure in place, because when I sell my business in 3 years, I'm going to be able to ask for a premium because I have structure, I have things running, the gears are all running correctly, and I'm going to make that money up in 5-6 times, right? So if you're thinking, I'm going to save, I'm going to wait, I'm going to DIY it myself, it's not going to happen. It's just not going to happen. So this is not just a bare house you can paint the walls. So, know, it's just not. Okay, so we are already at 30 plus minutes. So, and we do try to keep our show within the 30-minute timeline, because we know business owners are busy running their businesses, and we want to be cognizant of their time. So I wanted to kind of leave you all with the same quote that I leave you with every time. From Jim Rohn, and it's you are the average of the 5 people you spend most of the time with. I hope that we are the 2 of the 5 people you are spending your time with. Just make sure to follow us on different social media channels. Follow the channels here on YouTube, LinkedIn, and Facebook. Make sure to also like and share. I mean, don't keep this to yourself. Share the videos, share the audio, so that more business owners and entrepreneurs can get this excellent information we're putting out there. So with that, we'll see you all next week, Thursday at 10 a.m. Have a great day.
Okay, take care.